Welcome, the learner, to another deep dive. Today we're taking a bit of a shortcut, really, getting you clued in on a company we all know, Uber. We've dug through their Q2 2025 earnings call, the press releases, all that supplemental data to pull out what actually matters. Get ready for maybe some surprising facts, those aha moments, without all the dense jargon.
That's right. And look, this isn't just about the numbers themselves, though they're impressive. It's really about understanding the strategies underneath it all. What's driving Uber's growth, and what does it mean for how we actually get around, how we interact with the world. We'll dig into how they're hitting these record levels audience, how often people use it, profitability, and their pretty ambitious plans for the future.
Can't believe us. Q2, it was a big one. Uber reported record highs basically everywhere. Robust growth in trips, gross bookings, both up, 18% year over year? Significant.
Yeah, 18%. Pretty substantial.
Okay, so let's unpack this a bit. Uber's CEO, Darko Swarshahi, he keeps talking about the unique power of our platform to foster deeper engagement. But, translating that, what does that actually mean for you, the listener? Is it just corporate speak?
No, I think it's actually quite tangible. Essentially, Uber's really leaning on its huge user base. They want to encourage people already using it to, use more of it. The cross-platform activity, they call it. So getting you to use both mobility, rides and delivery. And the surprising thing they mentioned, fewer than 1 in 5 of their consumers are active across both.
Only 1 in 5. Wow.
Yeah, but they clearly believe that number can go much, much higher.
Yeah.
And to sort of supercharge this, they've put Andrew McDonald into that chief operating officer role. Now, both mobility and delivery leads report straight to him. It's a structural change, really, aimed at driving more aggressive, unified cross-promotion.
Okay, and this is where it gets really interesting, I think. Why should Uber even care if you use both?
Well, the numbers tell the story. Those who do use both services, their retention rates are over 35% higher than people who just use rides or just use delivery.
35% higher retention, that's huge.
And they generate 3 times the gross bookings and, crucially, 3 times the profits.
3 times.
Exactly. So it gives Uber this structural advantage, right, over competitors who are maybe monoline, just focused on one thing.
Like only rides? Or only food delivery?
Precisely.
So does this mean they're aiming for one single super app eventually? The one app that does everything?
Well, it sounds like they've debated that internally quite a bit. But for now, the main Uber app, the Rides app, already has that delivery tab in it. And get this, that tab alone, in Q2 2025, generated something like $10 billion in annualized delivery gross bookings.
$10 billion. Just from a tab in the other app.
Yeah, or about 12% of their total delivery bookings. It's pretty astounding. So they say they're aiming for the best of both worlds. Highly tuned, separate apps, but apps that intelligently cross-promote. They're using sophisticated AI models for this, trying to create hyper-personalized experiences. Like what? Give me an example.
Like maybe suggesting a Starbucks promotion on your Uber ride screen when you're heading towards work, that kind of thing. But they describe themselves as only being in the, quote, second inning of this whole integration journey. It's a long journey, they say.
The second inning. So still very early days in their view. Okay, so what does this all add up to right now? Their monthly active platform consumers, MAPCs, hit a record 180 million. That's up 15% year over year. I mean, that's just a massive audience, isn't it?
It's huge. Absolutely. And even with that number, they seem convinced there's significant room left to grow. They talk about using a barbell strategy in mobility.
A barbell strategy. Okay, what's that?
It means they're pushing hard at both ends of the market at the same time. So low-cost options and premium options.
Okay, break that down. Low cost first.
Right. So you've got things like Moto, that's their two-wheeler services, mainly in emerging markets.
Yeah.
That's now over $1.5 billion in annualized gross bookings, grew 40% year over year.
Wow, 40%. Yeah. Then there are products like Wait and Says. If you're willing to wait a bit longer for your ride, you get an average discount of like 9%. And shared rides are making a comeback. Think Uber Shuttle, they mentioned one to New York area airports, priced around $25 each way.
Okay, that's pretty accessible.
And for regular commuters, there's this price lock pass. It's like $2.99 a month, and it gives you fixed prices on certain routes you use often. They found users with that pass took, on average, 6 more commute trips per month.
6 more trips. So it clearly encourages frequency.
Definitely. Then, okay, swing to the other end of the barbell. The premium stuff.
Right. Comfort Black.
Exactly. Comfort, SUV Black, those premium vehicle offerings, they're now well over $10 billion in annualized gross bookings, and trips on those grew over 35% year over year.
Also strong growth.
Very strong. And reserve trips, where you pre-book a ride, growing even faster, nearly 60% year over year. Oh, and Uber for business saw trips jumped nearly 30% too.
It really does sound like they're casting a super wide net, trying to be everything to everyone, almost.
It seems that way, yeah. And they're also targeting specific demographics now, too. They introduced senior accounts for users 65 and older. Simpler app, bigger text.
Oh, that's interesting.
Yeah, and features letting family members book rides for their loved ones.
That actually seems quite useful. I could see that being popular.
Right. And despite this massive reach, 180 million MAPCs, they pointed out that even in their top 10 markets, only about 20% of consumers use Uber monthly.
Only 20%.
Really?
Yeah. So in their words, there's still a ton of audience that we can continue expanding into.
And they're expanding geographically too, right? I saw mentions of Europe and the Middle East.
Absolutely. Trips there are growing nearly 30% year over year, often through new partnerships with local taxi companies, which is a smart way to enter or grow in some markets.
Okay, let's talk about another big growth driver, Uber One, the membership program. The numbers here are pretty staggering, over 36 million members now, up roughly 60% year over year. It's exploded, hasn't it? And that growth translates directly into, well, deeper engagement. Members now generate over 40%, 0% of the combined delivery and mobility gross bookings.
40%, so less than, what, 20% of users? But 40% of the bookings, that's incredible leverage.
It really shows how valuable those members are. Now, Uber One was apparently an immediate huge hit for the delivery side of the business. They've been working more recently to make it more appealing for mobility users, too.
Oh, so?
Well, they just launched Surge Savings in the US, so members can actually save money during those peak times when prices usually surge. That's a tangible benefit.
Yeah, that directly addresses a common pain point.
Exactly. And they also expanded Uber One benefits to micromobility scooters and bikes. Members get 10% credit back on Lime trips now.
Adding value piece by piece.
Right. And they had that Member Days event recently, apparently a huge success. Added nearly 500,000 new members in just 1 week.
500,000 in a week. That shows those high-value benefits can really drive signups.
For sure. It builds loyalty and gets people hooked into the ecosystem.
Okay, so they're optimizing the current business like crazy. But let's shift gears, look further out. Something really futuristic. Autonomous vehicles. AVs. Uber's making a bold claim. They're leading the commercialization of AV technology. How exactly are they backing that up?
It's a big claim, but they're approaching it through partnerships, building this vast ecosystem. They said they now have 20 AV partners across mobility, delivery, and even freight.
20 partners. Okay, who are the key ones?
Well, the big one people know is Waymo. Deployments in Austin and Atlanta are going really well, apparently. They actually said Waymo AVs are busier than 99% of our drivers.
Easier than 99%. That implies incredible utilization.
Right. So they're expanding to hundreds of vehicles in those cities. And they mentioned a positive halo effect. The AVs are actually making the whole network run better.
Interesting. And beyond Waymo.
Some major new ones announced. Baidu, the Chinese tech giant, plans to deploy thousands of their Apollo Go AVs.
Ones that have already done millions of public rides.
Over 11 million, yeah. They'll start putting those on the Uber network, beginning in Asia and the Middle East later this year.
Okay, that's significant scale.
And then there's a first-of-its-kind robotaxi program with Lucid, the EV maker, and Nuro, the AV tech company. Tens of thousands of Lucid vehicles equipped with Nuro's autonomous driver system will exclusively join the Uber network, starting next year in a major U.S. city.
Tens of thousands.
Yeah.
Exclusive. That sounds like a major commitment.
It is. And overall, they have AV deployments live now in 12 cities across 3 countries. And they expect about 5 new deployments in the second half of this year, U.S., Middle East, Asia. They're really pushing.
Now, some people listening might wonder, isn't this incredibly expensive? Doesn't this mean huge capital investment for Uber? And how do these new deals, like with Neurolucid, affect their existing partnership with Waymo?
Great questions. And what's fascinating here is how Uber frames it. They view these partnerships as strategic investments, yes, but ones requiring, quote, a relatively modest part of our cash flow.
Modest.
Relatively speaking, yeah. They see it as a catalyst to get things started. Their belief is that once the revenue model is proven and that high Waymo utilization suggests it can be, then there'll be plenty of financing to go around, from third-party private equity, banks. Others will fund the expensive hardware if the demand network is there.
Ah, so Uber provides the demand, the platform, and others help finance the vehicles.
That seems to be the core idea. And they specifically mentioned that the Neuralucid deal, they expect it will likely yield better economics for Uber than maybe some earlier models.
Better economics, so they're refining the partnership structure as they go.
Seems like it. They're not locked into just one way of doing things.
So how do they plan to make money from AVs long term if they aren't owning all the cars? What are the models?
They outlined 3 main business models they expect to see play out over the next, say, 5 years. First, a merchant model. Uber pays the AV owner a predictable rate, maybe per trip or per day, and Uber takes the risk of filling the car with passengers.
Okay, like they guarantee revenue to the AV partner.
Kinda, yeah. Second, an agency model. This is more like their current setup with human drivers. Uber takes a percentage cut, a revenue share, from the trip fare.
Right, the standard commission model.
And third, a licensing model. Here, maybe Uber or a financing partner actually owns the vehicles, and they license the autonomous driving software from a tech company like Nuro or Waymo.
So owning the asset but not the core AV tech itself.
Potentially. They expect all 3 models will likely coexist, giving them flexibility.
Okay, beyond the vehicles themselves, Uber also mentioned externalizing its technical capabilities. What on earth does that mean?
Yeah, that was interesting. Essentially, Uber is sitting on what they call the most relevant mobility ride-hail data set in the world. Think about it. Billions of trips, 70 countries, every kind of weather, every traffic pattern. It's an incredible data asset.
Unbelievable amount of data.
So they're leveraging this data, not necessarily trying to sell it directly for profit, but using it to, quote, help AV get to market faster. They want to contribute to the real-world AI revolution, positioning themselves as having this crucial ground truth data that AV developers need.
So providing data to help train other companies' AVs.
That seems to be part of it, helping the whole ecosystem move faster, which ultimately benefits Uber's platform. And related to that, they're expanding Uber AI solutions as a platform for work, engaging their existing earners, drivers, couriers, and tasks like data labeling, translation, helping to tune the algorithms.
So finding new ways for people to earn money on the platform tied into this AI future.
Exactly. It's a pretty novel idea, showing how work itself might evolve on these platforms.
Okay, let's bring it back to the financials just to wrap up the numbers from Q2. Another quarter of record profitability, they said. Adjusted EBITDA, that's a key measure of operational earnings, was up 35% to $2.1 billion.
Solid number. And the free cash flow, the actual cash the business generated, hit an all-time high, $2.5 billion just for the quarter.
$2.5 billion in 3 months.
Yeah, and $8.5 billion over the last 12 months. That's serious cash generation.
So connecting that to the bigger picture, what does this financial strength allow them to do?
Well, it allows them to return significant value to shareholders while still investing heavily in growth, like those AV partnerships. They announced a massive new $20 billion share repurchase authorization.
$20 billion for buyback.
Yeah. And when you add what was left from their previous program, it totals roughly $23 billion that they plan to execute over the next couple of periods. It really underscores their confidence in the business spitting out cash.
And they committed to allocating about half of their free cash flow to these buybacks going forward.
Around 50%, yeah. It's a clear signal of financial maturity and a focus on shareholder returns alongside that future growth story.
What a journey we've just covered. I mean, from a record-breaking quarter in the normal business of rides and deliveries, all the way to this ambitious platform strategy using AI and really positioning themselves at the forefront of commercializing autonomous vehicles. Uber is very clearly trying to transform itself, isn't it? From just a ride-hailing app to something much bigger. Yeah. A deeply integrated movement and technology platform.
Absolutely. That shift towards being a comprehensive platform combined with these big bets and partnerships in autonomous tech, it really does suggest a future where how you interact with movement could be fundamentally different. You know, whether it's getting yourself somewhere or getting something brought to you, it might look very different soon.
It really could. Imagine a city where AVs are seamlessly integrated, available on demand through an app like Uber.
Yeah, instant deliveries, no parking hassles. It sounds futuristic, but the pieces they're putting in place suggest this is the direction we're heading.
So we'll leave you, our listener, with this thought to ponder. As Uber keeps pushing to unlock the full potential of their platform, as they say, and deploying these autonomous vehicles at Uber speed, how might this reshape your daily routines, your local economy, even just your basic perception of transportation and delivery, maybe in the very near future?